Hello, everyone. Welcome to the Newsbrowse News broadcast. According to Ling Xiaobo, U.S. President Donald Trump convened his national security team at the White House on Friday, May 22nd, to discuss the ongoing conflict with Iran and whether to launch new military strikes. Trump announced he would remain at the White House over the weekend, canceling a planned trip, stating it was crucial for him to stay in Washington during this critical period. Sources indicate Trump is seriously considering a decisive large-scale military operation if negotiations fail, having expressed growing frustration with the diplomatic efforts. While he initially considered giving diplomacy another chance earlier in the week, by Thursday evening, he was leaning towards ordering a strike. Senator Roger Wicker, chairman of the Senate Armed Services Committee, publicly urged Trump to resume hostilities, criticizing advice to pursue a worthless deal and advocating for continued military action and reopening the Strait of Hormuz. Meanwhile, mediators including Pakistan and Qatar are actively working to bridge the gaps between U.S. demands for limiting Iran's nuclear program and Tehran's objectives, which include ending the war, lifting the Strait of Hormuz blockade, and receiving financial aid in any short-term agreement. State news agency Xinhua, citing Saudi Arabia's Al Arabiya TV, reported on May 23 that sources close to the negotiations indicated a draft agreement between the U.S. and Iran was close to being reached and expected to be announced within hours. Thai Sounds reports that China's financial regulators have launched a significant crackdown on cross-border investment, punishing several online brokerages accused of illegally transferring funds to overseas markets. This move, announced on Friday, May 22, is aimed at further tightening controls on capital outflow. Three brokerages, Tiger Brokers NZ, Limited, Futu Securities International, Hong Kong, Limited, and Longbridge Securities, Hong Kong, Limited, were fined and had their illegal gains confiscated for operating without proper licenses. Futu faces a proposed fine of approximately RMB 1.85 billion (NT dollars), while Tiger Brokers was fined RMB 308.1 million and had RMB 103.1 million confiscated. As a result of these penalties, clients of the affected brokerages are restricted to selling their existing holdings and withdrawing funds, with no new investments permitted. This has led to a decline in the stock prices of several prominent overseas-listed Chinese companies. According to People's Daily Online, the People's Bank of China, PBOC, announced on Friday, May 2026, that it will conduct a 600 billion yuan, or approximately 87.7 billion US dollars, one-year medium-term lending facility, MLF operation on May 25. The primary objective of this action is to ensure adequate liquidity within the country's banking system. The operation will utilize variable rate tenders with a fixed quantity executed through a multiple price auction. Given that 500 billion yuan in MLF is set to mature this month, the upcoming operation will result in a net injection of 100 billion yuan into the market. Wang Qing, chief macro analyst at Golden Credit Rating, highlighted that this net injection of medium-term liquidity is expected to help financial institutions meet their demand for longer-term funds, thereby supporting bank credit supply and facilitating the smooth issuance of government bonds. The MLF, established in 2014, serves as a crucial tool for commercial and policy banks to maintain liquidity by borrowing from the central bank using securities as collateral. The China International Supply Chain Expo, CIS, is poised to significantly strengthen business ties between China and the United States. China.org.dn reports that U.S. companies have consistently ranked first among foreign exhibitors at CACC for 4 consecutive years, signaling the enduring appeal of the Chinese market and the deep integration of U.S. supply chains with China's manufacturing ecosystem. According to the China Council for the Promotion of International Trade, the Expo, running from June 22 to 26 in Beijing, will host 676 leading Chinese and foreign companies from 85 countries and regions. Foreign exhibitors constitute 36.5% of the total, with over 65% being Fortune Global 500 companies or industry leaders. A new artificial intelligence (AI) zone will debut, showcasing the full AI ecosystem and featuring major U.S. tech firms like NVIDIA, Intel, and Qualcomm. Further underscoring cooperation, U.S. government and business delegations from states such as Florida and Utah are planning visits, and U.S. trade associations will hold promotional events. Both nations have also agreed to launch an intergovernmental dialogue on AI and establish trade and investment councils. Despite differences, officials and business leaders, including Sean Stein of the U.S.-China Business Council, emphasized the mutual benefits of collaboration, viewing China as a vital platform for investment, R&D, and supply chain resilience. According to UPI, Ellis Electric Chairman Koo Jak-yoon has called for enhanced quality and delivery competitiveness as the South Korean power equipment manufacturer aims to expand its presence in the North American data center market. During a recent visit to the company's Chongju plant, a crucial production base for power equipment used in U.S. data centers, Koo inspected switchgear and high-voltage circuit breaker lines. He stressed the imperative for top-level high-end quality and flawless delivery capability to meet the rigorous demands of next-generation power grid fields. Koo highlighted that the rapid growth of artificial intelligence data centers is fueling a power supercycle, leading to significant demand for advanced power solutions. He urged early investment in continuous technological innovation, warning against complacency in a transforming global power market. That's all for this video. Thank you for watching. See you in the next video.